Welcome back, and joining me now is Lonwabo Maqubela from Perpetua to take us through today's market moves. Lonwabo, thank you so much for your time today. How closely are you watching the developments between the US and Iran? Tensions seem to be back in focus, and that seems to be weighing on markets and, of course, lifting the oil price.
Hi, good evening, Dar. Yes, I think that we've seen that definite move over the last couple of days. It is something we are paying attention to. In fact, I would say that we've noted that maybe over the last 5 years, geopolitical risk has become something that you've had to pay increasingly more attention to.
Yeah.
And in this case, the Strait of Hormuz is obviously quite an important choke point for oil supply. So it's not so much what happens to Iranian, domestic supply more than actually it'll affect quite a few countries if there's a choke point at this Strait of Hormuz. And the moves by the US government are quite hard to read, but obviously quite a big mobilization of equipment, aircraft carriers and the likes. And, I guess the market has also been burned once now after Venezuela. Perhaps people initially thought they were bluffing, and they acted. And so, the market is I think rightly apprehensive. We also saw earlier on in, last year when there was the Iranian attack specific by the US, and at first it seemed as though there were going to be negotiations, and then the negotiations never took place, and and there was some kind of military action, and so I'd say that the risk is high.
So mainly
that something happens there.
Yeah, so mainly those demand supply dynamics being watched closely, particularly when it comes to the Strait of Hormuz. The last time I checked, that oil price was at $69.90. So yeah, close to that $70 mark. All right, let's take a look at what's playing out on the currency front. The rand, of course, taking a hit. I noticed that the dollar is trending stronger today. What's behind that? Does it have anything to do with the Fed minutes we got overnight? We did see policymakers leaning towards a more hawkish tilt.
Yeah, and I think if one looks at the jobs data that came out last week, there's a similar trend where the numbers were stronger than what the market was expecting. And I guess the Fed, has an early indicator to some of that data, and so their concern that's coming out of the minutes is that they think the job labor market is stronger than they had initially assessed, and they worried that as a result, inflation remains stronger. Hence why the caution that most likely rate hikes or rather at least cuts are much further away than what the market thought, and potentially a pause is on the cards.
And I was about to say, don't spook us with rate hikes, because that's not good news for gold and our gold counters. Moving right along to those gold counters, all that glitters seems to be gold, Lonwabo, and some of those players really making back on the back of a high yellow metal price. Goldfields no different, as earnings more than doubled. A share buyback, a special dividends. Shareholders will be smiling to the bank. Just take me through your analysis of that counter and what you made of the operational performance. Because yes, we are seeing prices high, but what are we seeing down at the mines?
No, yeah, I think, it's also metal prices where they are, it's no surprise that the earnings are doubling across the board, I think, for the sector. I thought what we saw out of Goldfields was a very credible operational performance. So, South Deep, I think production was up some 16%. They had started a new mine kind of in the last couple of years called Solares Norte. And, there we also saw production performing ahead of expectations. And so the market, and that was a big uncertainty. Often mining companies, when, you have a new mining operation, it tends to disappoint. So the expectations, and at least in this case, they're exceeding them. So good performance coming out of there. And then there was one of the mines, I think Takwa, where There were some challenges, but all in all, I think a credible operational performance. I think we probably will start seeing, that's a point of the cycle where the capex budgets tend to open. I think cost inflation is high just generally, so so the cost may be running slightly ahead of expectations. But I think a decent result nonetheless. The special dividend was also something welcomed by the market.
Yeah.
As well.
It was surprising to see that the share price didn't tick higher on the back of that, but that could probably just be on the back of a downbeat day in markets, right?
That's correct, yeah.
All right.
And the whole sector was down.
Okay. Let's get your stock pick. Where are you seeing value at the moment?
Yeah, Mondi also reported this morning, it was, so the numbers were down by about 30 odd %. And as you mentioned, they did cut the dividend. But, Mondi in this result, they earned 50 euro cents. Typically, the business does about €1.50. So earnings are significantly lower than where they typically are. And so we think this is a cyclical low. From what we can see on our data, quite a large percentage of the industry, particularly in container board, which is the board that goes into making boxing paper or box board. A significant percentage of the industry in Europe is losing money. And so we think, you'll start to see some curtailing of production. And in fact, Mondi closing some production sites themselves earlier today, and they spoke about having cut the headcount by some 1,000 people, or 13%, where they're seeking to reduce group overhead costs. And they're cutting capex, going forward. And so we're expecting that you'll begin to see free cash flows improve. And then Mondi's been investing in the down cycle. So when things improve, you'll get the benefit of slightly better pricing plus slightly more volume at cheaper costs.
All right, let's leave it there, Lonwabo. Thank you so much for your time and taking us through what's moving our money today. Now, that was Lonwabo Maqubela from Perpetua.